evening, everybody. Johnny Seville here from Acorn Wealth Corp. This is your executive summary for stock setups for Thursday. I hope you all enjoyed the Smart Money session tonight, which was the second instalment of course, Monday's lesson. And we did a very expansive breakdown of what's going on in the markets this evening, and also had a quite an extensive look at all of our favourite long setups if we do continue to go bullish here. For those of you that maybe missed it, let me quickly recap. The main takeaway on the market was that the S&P 500 is yet to break out of open range. We're looking at the SPY here, but similar thing. The high was 273.17 on the SPY. It's 272.78 today on the close. So we're still yet to break out of open range on the SPY. However, if we look at high yield bonds, if you look at high yield bonds, as you can see, those are yet to break out as well. So high yield bonds, the high on March 1st was 85.93. The high today, 85.66. So the SPY hasn't broken out. The high yield bonds are still kind of looking fairly bearish. However, if we go and have a look at stocks above or below their 50-day moving average, we've actually gone from 30% on March 1st to currently 45% today. So we've actually gone up by 15.7% roughly, more stocks above their 50-day moving average, despite the S&P making a new high from that same day. So there is a slight divergence of stocks above their 50-day moving average moving ahead of the SPY and high yield bonds. So that's certainly possibly a short-term bullish action. Now, if you look at where that movement's coming from, it's not coming from the Dow, it's not coming from the S&P, but if we actually look at the Russell 2000, you'll see that that's where the movement's coming from. We've made higher highs. We closed at 149.95 on March 1st. We're now at 156.74. So we've certainly broken that range on the Russell, and we've gone higher and higher. So what does that mean? Well, what that means is that obviously Russell 2000 stocks are generally considered more speculative. They're the lower cap stocks, smaller cap stocks, and they generally fall more than the market, and they typically rally more than the market. So they're more elastic, and they often can lead market rallies or drops. So the fact that we're seeing the Russell 2000 as well as stocks above or below the moving average moving ahead of the S&P is showing us that money is moving into some of these speculative stocks. Obviously some short covering is obviously probably going on as well, which fuels that rally, and that's where that pocket of strength is, and of course where we therefore like to focus any longs that we're looking for to be in that lower price or lower market cap bracket. Now, we should be cognizant of, though, how the Russell 2000 is rallying, because as you can see, we are mostly in this longer-term upward channel on the Russell. And if we look at the short-term movement, you can see that recent rally we've been having since the low in February is also moving up in an upward channel type of fashion, which would indicate possibly it's moving up to want to retest these highs before the drop. So that's what the Russell's looking like. Now, when we go into the SPY and look at what's going on there, I'm going to go into the hourly chart. Okay, and what you'll be able to see is a possible scenario. I redrew this on a blank slate here, so let me just show you what's going on. So what we talked about is that obviously we have had. One second here. Let me piece this together for you, piece by piece. So we had the sharp drop. We had a downward channel here, and that downward channel suggested that we were going to. If we measure that. The downward channel gave us the target that the S&P 500 was going to rally up to this level, the 270 on the SPY. That's where we rallied up to. We then met this reversal area on the SPY, dropped down, have bounced back up, and again kind of consolidating in what looks to be like possibly another downward channel. Okay, so just taking away everything else I've got on the chart here, that's what the short-term movement would suggest, is that we've had a downward channel, sharp rally up, possibly another downward channel here, and of course that would also indicate bullish movement or a breakout to move to the upside. So when analyzing the overall pattern, when we connect all these highs and lows together, you can see that possibly what we are forming is this kind of rising wedge formation, which you can see here indicated if we put it in red. There you go. You can see the rising wedge possibility there moving upward. So what this could suggest with the Russell 2000 leading in a bullish direction, stocks above or below the 50-day moving average leading in an upward direction, that possibly we are going to get an open range. The SPY just hasn't hasn't followed suit yet. But if this were to play out, what we would expect is maybe a pullback to this red line, or possibly just a straight breakout. But basically, this consolidation zone here would push the index higher, and if that were to then occur, we would measure, as we do, the distance between the top and the bottom of the channel, and that would be indicating a breakout up to these kinds of levels. You know, up to 282, depending on where we break from. If we broke immediately, we'd be looking at 284. Depending on where that breakout occurred, we're basically looking at a possible rally up to where we broke down from in February, up to this level here, which you can see meets with that channel target. So if that were the case, we're looking for bullish action through in the short term, and then we'd be looking at obviously the top of this resistance and some kind of consolidation there. But eventually what this is suggesting is obviously a breakdown, because we would be in a rising wedge. So after we reach these kinds of levels, we would be once again talking about a drop in the market by this measurement, by the rising channel measurement, at some point. For example, if we were to do this, if we were to rally up to hit kind of this 283, 284 area, complete that downward channel extension, and then start rolling over, and kind of say, let's say late next week, Thursday, Friday, pulling back down towards, which is of course when open range resets. So we'd be talking about a possible bullish move this week and into early next week, then rolling over in the later part of next week and pulling back to this kind of support zone around 274. We then get a new open range at that point in time, and then looking at a bearish break, which would bring us back down to the lows of where we got down to in the February crash. So just showing you a possible